Good late afternoon and thanks for joining us. I'm Holly and you're watching Kalkine TV live from Sydney. This is the last show of the day, the last trade. The Australian shares rose for the third straight session today on firm global cues as well as accommodative policy stances by the Bank of England. Market sentiment was also lifted after the Reserve Bank upgraded the economic growth outlook and dismissed the report of rate hike in 2022. The benchmark ASX 200 index closed 28.9 points or 0.39% higher after opening in the green today and gaining as much as 0.66% during the session to set a new 20-day high. The equity market witnessed broad-based buying with 9 of 11 sectors ending in the positive terrain. Telecom sector topped the sectoral gainers chart by rising 1.6%, which is followed by over 1% gains in consumer staples and the utilities space. Meanwhile, materials, consumer discretionary, AREIT and healthcare sectors also settled higher. On the flip side though, the IT sector emerged as the top laggard with a 1.7% in loss. The tech sectors witnessed a surge in selling activities as investors resorted to profit booking. And the energy sector also ended 0.6% lower, extending the fall for the third day due to a continued fall in crude oil prices. These oil prices dropped overnight amid a report that OPEC and its allies, led by Russia, rejected US President Joe Biden's pleas for a large production hike. And the biggest gainer on the ASX pack was fund administration company Link Administration, which ended 8.3% higher. Other top gainers include media firm News Corp, gold miner Northern Star Resources, media business REA Group, and real estate group Cromwell Property. Meanwhile, biopharma company Clinuvel emerged as the top loser by falling 11.5%. The other worst performing stocks were English bank Virgin Money UK, healthcare equipment manufacturer PolyNovo, BNPL major Afterpay, and engineering and infrastructure provider Downer EDI. Now for a look at the stocks that grabbed investor attention today, starting with Aspen Group, which traded flat following acquisition news. The company's entered into a conditional contract to acquire the Meadowbrook Lifestyle Estate in Boyanup, Western Australia, under a receivership sale. The transaction value of the deal is $3.258 million, while it's expected to be complete by December of this year. Meadowbrook Lifestyle Estate is spread across 9.1 hectares, and consents are in place for 181 houses, and of these, 17 have been built and sold till date. Meanwhile, the share price of BlueScope dropped marginally in a choppy trade after it unveiled its plan to expand its footprint in the US. The steel producer is expanding its extensive US asset footprint with a recent acquisition agreement with MetalX LLC. The acquisition is a significant step in BlueScope's future growth trajectory, as the acquisition adds to BlueScope's US assets of over $3 billion. The business spans steelmaking, steel coating and painting, engineered building systems, and industrial property development in the US. Now it's time for a short break with that said, but stay tuned because I'll be right back with more trending updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV. Hello and welcome back. Holly this side with the market close commentary. Let's have a look now at some more stocks that grabbed investor attention today. Well, media and publishing company REA Group shares surged today after it announced its results for the 3 months ending 30th of September, The group has delivered a 22% year-on-year growth in revenue, driven by broad-based performances across all business segments. They're expecting the momentum to remain positive with the vaccination milestones being met and restrictions being lifted. REA also expects property markets across the country to revert to their normal property market operations. And meanwhile, shares of a Link administration rose 11% after the fund administration company received a takeover offer. They informed their shareholders that they had received a takeover bid from Carlyle Asia Partners, an affiliated entity of the Kalkine Group, to acquire a 100% stake in the company. The bid comprised of a cash offer of $3 per Link Group share and a pro-rata distribution of Link Group's shareholders at 2.38 apiece. And shares of News Corp jumped over 10% after the US-based media company reported robust earnings in the first quarter. The media firm has reported over six-fold growth in net profit to $267 million. They also announced a $1 billion share buyback program and the termination of the stockholder rights agreement. Shares of Woodside Petroleum dropped 1.5% after the oil and gas major lowered its gas reserve estimates. The energy giant has raised the reserves and resource estimates for 1P filed, located in the Greater Pluto region, by 10%. However, it's lowered its 2P field estimate by the same figure, and overall the total reserve estimates dropped by nearly 10%. The Greater Pluto project off WA is a significant and valuable resource for Woodside. And meanwhile, shares of Commonwealth Bank traded nearly 1% higher after they hiked home loan rates for the second time around a month. The country's largest home loan lender raised fixed rates on home loans by 0.1% to 0.5%. And on Thursday, rival Westpac had also hiked rates for the second time in around 2 weeks. The banks are raising home loan rates after the Reserve Bank scrapped their policy to control 3-year bond yields. And shares of the investment management group Pendal climbed over 2% on robust earnings. The fund manager reported a 41.5% jump in the net profit for the financial year to September 30, and revenue rose 34.6% as well compared to the previous fiscal. They also proposed to pay a final dividend of up to 11% to 24 cents per share as well. Moving on to the next segment, a look east, and shares in the Asia Pacific region were trading mostly lower today, undermining firm cues from Wall Street. The market sentiment was dented by looming fears about equity crisis in the Chinese property sector after a real estate company missed a payment. Shares of a Hong Kong-listed Chinese property developer Kaiser Group were suspended today after their subsidiary missed a payment on a wealth management product. Hong Kong's Hang Seng was the worst performer in the regional market, falling as much as 1.2%. This was led by rate-insensitive bank and property stocks. The investors reacted negatively to the Bank of England after their stance refrained from raising interest rates on Thursday. Similarly, China's Shanghai Composite dropped 0.3%, while Japan's Nikkei tumbled 0.7%, and South Korea's Kospi traded lower by 0.55%. Indonesia's Jakarta Composite dipped 0.2% as well, as the Straits Times Index in Singapore rose 0.6%. Meanwhile, the weighted Taiwan Index surged 0.7%, and Thailand's said composite also traded marginally higher. The markets of India remained closed on the eve of the Diwali festival. Well, that is a wrap today, folks, but I hope you found the market closing commentary informative. We'll be back on Monday live from Sydney at 9:30 a.m. in the morning with our first report on the pre-market conditions. Take care and stay safe. Holly Shield signing off.